Two big stories this week, that anticipated rate cut by the Fed and, of course, the Bank of Canada on Wednesday, and the Americans kickstarting trade talks with China. We're joined by Dan Rohinton, portfolio manager at IA Global Asset Management. Great to see you, Dan.
Good to see you
ever. Let's deal quickly with the interest rate cuts. Is there anything we should remember there or anything investors may be forgetting?
I think the most important thing to understand, and we're not macro investors in what we do, but the best thing to appreciate is the probability of this rate cut is 104%, which means that there's a 100% chance of a 25 basis point rate cut and a slightly 4% chance of something a little bit greater than that.
And you're talking about the U.S.?
Yeah, we're talking about the United States. And the Bank of Canada is expected to cut as well. So when it's all one-sided like this, you got to ask the question from here. The next question is, well, how dovish are they going to be in their commentary? And what does that mean for the gold market? What does that mean for equities? Because equities are, I would say, broadly reflecting the rate cut and then the hopes for a continuation of the glide path. And you have to see whether the central banks are actually going to pivot off of what is already the known onto the next step, which is what the future meetings will look like. So I'd say I don't have a particularly strong view, but I think the market does.
Okay. What about the U.S. and China? Of course, superpowers engage, and they're frenemies to some extent. I mean, they're in a global power struggle.
Yeah.
Well, how should we look at these trade talks?
Yeah, tense, I think, is the best way to summarize it all. But when you think about just some of the moves that have happened, so say over the weekend, China's opened up a probe into the analog semiconductor companies for dumping,
like
which
Texas,
is Texas Instruments and analog semi. That's very rich coming from China, which is very good at dumping goods and services into other economies.
Yeah.
So the point being is it's a point of leverage. What we find out this morning is China is looking into the Mellanox NVIDIA deal from, I believe it was 2020.
I think so.
So it was a few years ago for, a coincidental timing. So if you look back, approve at a deal, and suddenly you're potentially in violation, just in the week that you're having these discussions, the United States on the other end, they're talking about TikTok and the waiver for whether TikTok should be banned. So we're setting up the pieces and the chips for negotiation, and we'll see where the compromises really sit. I think it's interesting, Andy, that Apple hasn't been brought up in this conversation. So kudos to Tim Cook for navigating what is probably the toughest CEO job, because you have your supply chain and your customers in one continent, in China, and you also have a lot of customers in the United States as well. So finding a way to dance your way out of this discussion while NVIDIA and the other semiconductor companies get wrapped up in it, I think good job on Tim. But we'll see what this meeting, what comes from this meeting. But I think it's important to also say, we've moved fully back from the extremes of the 125% tariffs that were reciprocal. 50% is still moving towards a medium-term detachment. And the direction of travel, I would say, is irrespective of these talks. I don't have a strong view on which way they're going to go. Is the 5-10 year journey from here is more decoupling as opposed to more globalization. I do feel comfortable saying that.
More globalization.
More decoupling.
Oh, decoupling. Less globalization.
Less globalization.
Sorry. Yeah.
I apologize. I should have been more clear.
No, sure.
Yeah. Less globalization, more friendshoring, and more China-focused companies focusing on China, and more detachment from U.S. companies and diminishing their exposure into the Chinese market.
Kind of dividing the world into two spheres to some extent, U.S. and China. There was a lot of talk about infrastructure and nation building last week. I got to ask you about one thing. One thing Mr. Carney mentioned, although it wasn't his 5 lead projects, was high-speed rail.
Right.
And you are not a fan.
It's not that I don't like trains. It's more just how do you functionally build a large-scale infrastructure project when we've had trouble building homes at scale, or remotely so, and mismatching that. So think about the 407 experience and
that big toll road.
Exactly, the big toll road that's in the northern parts of Toronto. Is one of the best infrastructure assets in the world. It generates billions of dollars in EBITDA that could have been in public coffers. But the government had a hard time building it, and they privatized it. So when you think about just the steps you need to take to actually build high-speed rail in a cost-effective manner, just ask California, just ask Ontario's experience.
Ask Britain, H2, that was a disaster.
Ask the Big Dig in Boston. So when I see big government infrastructure projects that aren't LNG or energy export or something critical to Canada's trade surpluses, or minimizing our trade deficit, I should say, I generally roll my eyes a little bit, because it seems like a great way for WSP and the consultant engineering consulting firms to get a little bit more revenue, but actually building it out, triple the cost and add 10 years to the price, 10 years to the completion time.
And say Canadians traveling between Montreal and Toronto, they can fly, but will Canadians give up their cars? Will they embrace trains in a big way?
No, and you know what? When I've been to China, I've seen high-speed rail done really well, connecting Beijing to the outer cities. It truly is impressive, but once again, it just goes back to how much land are you going to have to do for eminent domain, take it over, build it on, and so on and so forth. I mean, we're just little ways removed from Union Station. I remember I was a teenager when that was first starting to get renovated. We're still renovating right now.
Yeah.
So I'm not too bullish on large public infrastructure projects.
Any thoughts on these 5 that they were talking about? I mean, there were nothing new here, really. Some of these projects are already underway. So they got the LNG doubling. The small modular reactor in Darlington. I mean, that's going to cost billions. Are you a fan of it?
I think my general philosophy on these things is let the free market guide you down that path. And I think about the solar example a lot in this discussion, and wind. So Germany spent billions and billions, or sorry, not billions, tens of billions in subsidies to build the solar capacity for their country. Texas didn't subsidize much of it at all. And Texas solar placements are accelerating at an exponential rate and all across the United States. So I think when it comes to government-directed large capital pools, generally speaking, let the free market do its work and get out of the way, and there's prosperity and positive externalities for all. So I'm very libertarian in that way.
And and if the private sector loses loads of money, tough luck. That's capitalism.
Yep.
Yeah. Always fun talking
Pleasure.
to you, Dan. Dan Rohinton.